Obviously, one of them is fear. One of them is actually getting out of their winning trades too quickly and staying in their losing trades too long. I mean, there are, look, my partner, David Green, who obviously your audience knows, he and I have curated a course about technical analysis and trading. One of the key issues is the psychology of trading. Right? There are certain rules, right, which we talk about every day. It's the 5 secrets of successful day trading. And I think it's really important to note they are the biggest impediments for new traders to make money. Everybody with $100 and an iPhone could finally have access to the market, right? That was never the case before. So that opened up the world to trading. It happened at a time, around COVID, everybody was sheltered in place. They had a couple of shekels in the bank because they had gotten a stimulus check. There was the meme phenomenon. There was Wall Street bets and all that kind of stuff. So it was like a perfect storm and whatnot. However, what they didn't tell people were the rules of successful trading. They kind of like gave them access to the party, and they didn't tell them about what happens if you go crazy at the party, right? It's like, you go to a party, you have 1 shot of vodka and you're good to go. But if you go to the party and you have 12 shots and you start getting irrational and irresponsible, well, the party won't end well. It's the same thing with trading. If you come into a game that you never had access to before, but you don't know the rules of the game, and you start to trade, right, without that discipline, without the rules of the game, without the playbook and the menu, well, then you're going to get blown up. And we don't hear about the stories about the 80% of people who try to day trade who are not successful. All we do is see on social media the people who claim they made a lot of money, sitting on the back of a Bugatti, with $10,000 money and all this stuff. And so I think the most important strict rules are discipline and consistency. One of the most important rules is taking a profit when you can, and not when you have to. One of the most important things is using stop orders, risk management. What an amazing tool that the stock market gives us as a new retail trader, the ability to be able to identify our risk, right? I've spoken to you about this every Friday, right? I know I'm willing to risk $50 to make 200. That's a wonderful thing to be able to do that. And I am able to do that by using stop orders. Everyone who may not know what a stop order is, go and study it. It is the biggest part of successful day trading, not mental stops, but real stop orders, bracket orders, things like that, where you identify how much you're willing to lose in a trade, and then also being able to take a profit immediately when you get into a trade, so that you're trading in a profitable way with some kind of confidence. It doesn't happen overnight. It takes 3 to 6 months to really get this thing down, the day trading skills. But it's a matter of the discipline and the psychology are the most important. Everybody we can teach, David Green and I can teach anybody to get into a trade, to hit a button on the buy side and the sell side. It's what you do when you get into a trade, right? It's not changing your mind about the risk parameters, not changing a stop order, right? It's about taking a profit. As soon as you're up 50 cents, start to take a profit, sell half your position, move your stop order up to break even so you cannot lose money on the trade. If you're having a bad day, 3 losing trades, turn the machine off, go home, go to the beach, go have a Coca Loco and a cigar, take your family out to dinner. Don't go out there and revenge trade. You can turn a $100, $200 losing day into a $5,000 losing day. Having a plan when you get into a stock. Why am I buying or shorting the stock? Have a reason, not because Uncle Herbie on the internet told me to do it, or I'm throwing a dart at a wall and I hope it goes up. Those are not legitimate. It's FOMO, hype. Those are not legitimate reasons to get into a trade. Price action and technical analysis are the keys. The chart will tell you when it's time to get into a trade, right? So always have a plan when you get in. Why am I buying or shorting the stock? Always having a stop order when I get in there to identify and protect myself on the downside. Never turn a winning trade into a losing trade. If I'm in a trade, don't watch it go up $2 or $3 and not take a profit and then go get a coffee. And the next thing you know, it's down $3 and you've turned a winning position into a losing position. Never turn a winning day into a losing day. What I mean by that is I'm up $1,000. I think I've got diamond hands, This is easy. You start getting irresponsible. You put all your chips in, you start upping your size, right? You get irresponsible, and then you're up $1,000. Suddenly, the next thing that you know, you're down $3 or $4 grand, right? Never averaging. And the only way to blow up a trading account is not using a stop order or averaging into a trade.